everyone, my name is Mills Bender. I'm the founder and CEO of Mills Knows Bills, where we're a team of financial coaches who help variable income earners master their money in 90 days. Today's video, we're going to show you how to go through our free budget setting tool and establish a budget for the first time. The reason why we've created a specific tutorial video is because our tool is based in Excel in order to allow it to be free for the masses. But we understand that some people aren't fully comfortable with Excel usage. So we're going to show you just how easy the tool is. Let's go ahead and get on started. Now, we're going to actually go through this with two different perspectives. We're going to go through it with a variable income earner perspective first, and then fixed income earners will have a look as well. So go ahead and input your name in the tool in the first slot. If you have a significant other, spouse, partner, who you share your finances with, you can go ahead and put their name here as well. As you can see, I can't edit any field that I'm not supposed to edit. So I can put information there, but there are specific cells that are locked, and that's done on purpose. The reason why we've locked some of these cells is to make sure that all of the functions within them still work, so that way you can't really mess it up. You really got to try hard to mess it up. So go at this with a lot of grace, and remember, it doesn't need to be perfect right away. We're just going to start with taking in the information. Once you have your name set, you can see that we have income information. And if you have a partner or spouse, their name will come here. And that would give you your total household income. And then you have tax information. So for variable income earners, one of the main components that are so difficult for us to manage our money with is the fact that we have such variable or fluctuating income. We don't know 100% what we can count on each and every month. So for my variable income earners, we're actually going to skip income, skip taxes, and we're actually going to go right to the expenses. I promise we will be coming back to the income though. The first thing you want to do is list all of your mandatory living expenses on a monthly, annual, semi-annual, doesn't matter, basis. The point here is to think of everything that you possibly pay for that is mandatory in your life. So I'm going to go ahead and fill in just a few different examples here. Okay. And let's say that I pay $3,000 a month for my mortgage. You can go ahead and just put whatever you pay monthly. Let's say I do that the first of the month. Pest control, however, let's say that I only pay that twice a year. And when I pay that, it's $150. So for those of you who aren't familiar with Excel, you're going to create a formula in here and Excel will do the work for you. So you simply put equals whatever you pay. I do this twice a year, so times 2 and divide it by 12. I want to see what my average monthly expenses are. So that's $25. For the vet, I only go once a year. So $350 divided by 12. The reason why it's important to look at all of the expenses that are even outside your regular reoccurring monthly ones is because they do add up. If you were to take a look at those annual, semi-annual, bi-monthly expenses, you would realize just how quickly those can be forgotten and just how quickly those can throw you off track. Groceries. Okay, so let's say that we spend $150 a week on groceries. A lot of people would say, oh, well, it's just 150 times 4. Not every month has 4 weeks though. If you were to say 4 weeks a month times 12 months a year, that's only 48 weeks. However, there are 52 weeks within a year. Some of you might be saying, oh, well, it's not that big of a deal. But if you think about it, that's an additional $600 throughout the month that you're not taking into consideration. If you're just foregoing 4 weeks of expenses, it adds up. So instead, we want to be really accurate with this. So you're going to say 150 times 52 weeks a year divided by 12. And 650 is really what you are going to be spending on average each month for groceries. Now, for my variable income earners, many of you are variable income because you are an intra or entrepreneur, meaning you have some business-like expenses that are mandatory for you as well. I want you to make sure that you include all of your monthly and annual and anything in between business expenses in this mandatory section here. I'm just going to use one for an example right now because I want to show the difference between bi-weekly and semi-monthly. So let's say that I have an admin who I pay every 2 weeks. And let's say that I pay them $500. Every 2 weeks is times 26, because there's 52 weeks a year, divided by 2, there's 26. So 500 times 26 divided by 12, which means on average, I would pay this admin a little under $1,100. However, if I were to say, oh, well, every 2 weeks is just twice a month, that's $1,000. Do you see how all these little changes add up and they make overall a much bigger impact than we might have expected? You can also come in here and put these frequencies so you don't forget. So I'm just going to say, pest control is twice a year. Let's say I do it February and July. The vet, let's say I do annually in December. Groceries, you can put weekly, but normally that's something you remember. And then admin, you can put bi-weekly, but again, that's something that you normally remember. If you are struggling with what type of living expenses should go here on the personal side, here is a list of examples for you to take into consideration. Let's move on to debt information. Now we're going to list all debt payments that we have each month. When it comes to credit cards, I only want you to put them here if you have an outstanding balance that you carry over month to month. So for example, we have a Chase credit card that we put all of our expenses on, but then when that statement bill comes due, we pay it off in full. So we're not getting any interest charged against us. If you use a credit card in that same way, that does not go here because those expenses that you're charging to that credit card, for example, groceries and gas, they're already accounted for in your budget, in your living expenses. So you don't want to double dip. However, this right here is for those credit cards that you've accumulated debt on and you've been trying to pay off, but haven't been able to cross that off your list yet. So let's just say I have a credit card with $25,000 outstanding. My minimum monthly payment, let's just say, is $250. I pay that on the 20th of the month and my interest rate is 24%. Let's say I also have a car loan and that's $10,000. I pay $300 a month. Interest is 5% and the due date on this one is the 15th of the month. Why do we care about the interest rate? If you are looking up this information in the first place, go the extra step and pull your interest rate from your debt statements. If you don't know what it is, pull up your most recent statement, do a simple search function on your computer, whether that's Command F or Control F, and type in APR, just like this, APR. And the interest rate that is next to that for purchases versus cash advances, if you actually use a credit card for a cash advance, but purchases, that is the interest rate that you want to put here. Knowledge is power when it comes to taking ownership of your financial journey. And if you have no idea what you're paying out, you have no idea how to pay it off. Okay. I talk about debt payoff in other videos on my YouTube channel. Feel free to kind of filter around and find that information. But this is step one. If you can gather the information, you will feel 10 times better. You can also put any of the other examples listed over here or any other loans that you might have. Now, some of you may be wondering why I don't have my mortgage here, and instead I have it up here. I treat personally my mortgage like rent. I'm not out here trying to expedite the payoff of my mortgage right now because the interest rate that I have is so much lower than what I could earn in my investments. So that's a topic for another day, but I just wanted to make note here that it doesn't matter where you put your mortgage payment, just make sure you only put it one time. You don't want to have it twice. Okay, so for my variable income earners, we've now completed 2 of the 4 mandatory components of your budget. Income and taxes, we set aside, and then we have living and debt expenses, which we did complete. The reason why we start with expenses is because it gives us some data that will allow us to figure out what we need to earn each month. If you want to take a little sneak peek, you can go over to your budget template tab here and take a look, but I'm going to explain this in just a moment, okay? Now let's move on to the extras. You'll notice that there's no area for you to put a monthly dollar amount. That's because for the fixed income earners, we actually need to allocate our discretionary income, but for variable income earners, we have the wiggle room to dream a little bit more. Either way, all I want you to do is make a list of where you want to spend your money, save, invest, in addition to your mandatories, okay? So I'm just gonna pull a few examples here from the right-hand side. I'm gonna say birthday gifts, holiday gifts, donations. Over here, I'm gonna say dining out, entertainment, and I'm just gonna say I have 1 subscription, but that's a lie. I got like 12. Okay, emergency fund. Let's say I want to have 6 months set aside. As you can see, there's a definition here. It's an emergency fund is meant to help cover you in times of need. However, for variable income earners, an emergency fund is even more important because it actually allows us to supplement months where our income isn't what we need it to be. And I'll again talk about that on the budget template tab. But let's just say I want 6 months. What this does is take the total of the monthly amounts that I listed for my mandatory living and debt expenses and then multiply it by 6, which means if I want to have 6 months of time for myself, $32,000 is what I need to have set aside. Vacations, you can approach this 2 different ways. You can say, you know, I'm going to Colorado in December of 24. Let's give us a couple years. And you can also say it's going to cost you $5,000. You can list out all of your different ones. However, I actually like having more flexibility in my vacations and just say every month I want to put a little bit aside for a vacation, whether or not I have one planned, because I personally love travel. What this allows me to do is if I'm setting that money aside consistently, if there's an ad hoc weekend vacation I want to take, bam, I can take it. Retirement savings, lead with your heart on this one. Of course, there is a method behind this, but for now, we're just trying to get the budget tool filled out. And then you want to go ahead and list any other goals that you might have. For me, I'm just going to put an investment account here. And I'm going to put debt payoff because I want to pay off that credit card and maybe pay off that car. Once you have all of your extras filled out, you want to come over to the budget template tab and fill out the right-hand side. Okay. So birthday gifts. I have a large family. Let's say that I buy 10 birthday gifts throughout the year. And for each gift, I spend $35. But I want to put money aside for that every month. So 12 divided by 12. That feels a lot better than saying if all 10 gifts happened to come out within the same few months, I would have a $350 hit within those few months. Holiday gifts, let's say I buy for 20 people and I spend $50. Let's divide that by 12 so we save all throughout the year. $83 feels a lot better than paying for holiday gifts all within November and December. Donations, let's say I want to give $250 a month. Dining out, put some numbers here that are realistic for you. You can always adjust them, but for variable income earners, you are in a position where you have the capacity to earn more money. Now, that doesn't mean that you want to earn more money just so it all goes out the door, but you get to set a standard of living for yourself. Clothing, let's say I spend $500 twice a year. Hair care, let's say I spend $350 twice a year. Spotify, $5 a month. Emergency fund. Let's say I want to have this fully funded in 3 years. So it's 36 months. That means I need to set aside $890. Vacations. Let's say I want to set aside $300. Retirement. Investment outside of retirement. And then I want to put an additional $25 a month towards my debt payoff. This tutorial is really just to show you how to use the tool. Strategy and making the most of your money, those are in other videos. But for my variable income earners, this now gives you 2 numbers to work towards. Your base goal each month should be about $5,400 plus taxes. So I would stack on an additional 25 to 30% of this dollar amount for taxes. You can see it's also duplicated here, okay? However, based off of all the other extras in your life, you really want to be earning $8,000 a month plus 25 to 30% for taxes. So what this allows you to do is take a look at your business or your day-to-day sales, commissions, doesn't matter, and say, all right, well, my goal is 8K plus 25 to 30%, but bare minimum is 5,400 plus 25 to 30%. And this gives you a little bit more data to work with, so that way you don't feel like you're going into your finances blindly. So variable income earners, work backwards, figure out your dollar amounts from here. Fixed income earners, I'm going to say that all the expenses remain the same. However, you know your income. Let's take a look at how you can put your income in here for the tool. Let's say you get $25 an hour and you work 40 hours a week. That means each year you're making on average $52,000. Of course, if you have a spouse, their information would be input here. For those of you who make a salary, you simply can put the annual amount. Let's just say you make 50K a year. 50K a year. If you know that you make a specific dollar amount each week, let's say $500 a week, that's 500 times 52. Yes, that was right. 26,000. Let's say that you make $1,500 every 2 weeks. That means you get paid 26 times in the year. That's 39,000. And let's say it's 1,500, but it's only twice a month, not every 2 weeks. So you multiply by 24, 12 months times 2 paychecks a month. It's 24 paychecks. Now, I'm just going to go ahead and put back in here, let's just say 45,000 a year. And let's say that you also get a bonus or commission in addition to your pay. You can put that information here. If you know that you've had over the past year fluctuating sales and then you get commission off of that, let's say 900, $50, 150, you see how down here it's updating accordingly. If you know that you get one bonus and that's in November, and that was, $2,000, you can put that there and it gives you the total. So you see, you work around and make sure that you put your information in here, but make sure you're not duplicating this information. The other thing I would say for fixed income earners is make sure that whatever pay you're putting in here, it's your pre-tax, your gross income. So not what's hitting your bank account, but instead what's actually being paid to you, because what hits your bank account is less taxes, right? So it's your gross pay minus any taxes that you've already paid. So speaking of taxes, all you need to do with the tool is put an X next to whatever filing situation pertains to you. So if you're single, put an X next to the single box. And notice what happens down here. It automatically updates it. If you're married, filing jointly. Oops. Married, filing separately. And head of household. Most people I talk with fall within the first 2 buckets. Some fall within this one. Very few that I work with fall into head of household. However, you would know if you fall into head of household. So I'm just going to leave it in single for now. We've already filled out all of our expenses. You want to go over to the budget template. So what this shows me is that I'm earning $3,900 a month. $770 are going towards taxes, which means $3,100 on average is hitting my bank account. In this example, I gave some pretty high, sometimes realistic numbers though for some people. And our expenses are greater than our net income. So this dollar amount here is the total of all the expenses we've listed. So if you come down here, you can see that the discretionary income or loss in this example is almost $2,200. That's just to cover the bare living and debt expenses each month. Then all the extras make up an additional $4,800 difference. So I'm going to show you what it looks like when you have everything covered. I'm just going to put a large dollar amount here. So 12,500, we have more money left over. We have 3,700 left over to be exact. As you can see, as I put dollar amounts in here, watch the amount left over, it goes down. So it will show you when you've over allocated any leftover money that you do have. Now, if you are in a situation where this number is negative, that tells me one of 2 things. You, A, need to increase your income, and or B, you need to decrease your expenses. Oftentimes, this is a situation where somebody has put a lot into debt. It's not every case, but if you are in that type of situation, you might want to consider reaching out to somebody to help you with debt consolidation or something like that. Now, if this is positive, but this here is negative, or you want to put more money towards other things, you can get a side hustle. You can change jobs. If you haven't gotten a raise in a while, you have the opportunity to talk with your employer about getting a raise. Now, the point of this video, again, is not to overwhelm you with all of the different scenarios and different things of money management. This is simply your step one today. All you want to do is fill in your information, no judgments, what you want and need in life financially. Then step two is to reach out to us if you have any questions or concerns. We can help navigate where you need to be putting your money, how to prioritize, how to figure out how to make ends meet, pay off your debt, all of that. But step one, fill it out. Don't put pressure on yourself. And if you need anything, let us know. If you'd like to reach out to us, you can email us at info@millsknowsbills.com. Feel free to subscribe to the YouTube channel here. Make sure you put on the bell notification so you know when new videos are uploaded. If you have anything that you would like to discuss, don't be a stranger, and we'll see you next time.